Welcome to Momentum Monday. Today is September 28th, 2025. Last week we saw a brief pullback in the major indices, and I view that as a normal consolidation in normal digestion in a bull market. The trouble is that when you see, 1-2% pullback in an index, when the indices sneeze, sometimes some of the momentum stocks, catch a cold. And we saw that last week. A lot of the momentum high flyers were under pressure and went down 20-25%, in a matter of a day or two. Um, for example, in nuclear, OK, AOL, you can see, I mean, they had an offering. Of course, they'll have an offering. They don't even have any revenue, and they're not expected to have any revenue for the next couple of years at least. So of course, they have to raise money so they can continue to exist and continue to hire. But either way, probably one of the top stocks year to date. Pulled back. I wouldn't be surprised if it continues next week and tests its rising 20-day moving average, around 100. And then the other nuclear price also, uh, took a cold shower. Probably one of the few ones that kind of held was Centrus Energy, LEU. But even they are starting to experience some distribution days, and I wouldn't chase them here. It's really important where we buy when we buy momentum stocks, and it's always better to buy when there is a range contraction near a rising 20, 50-day, 100-day moving average. It can offer much better risk to reward entry. So nuclear robot stocks were hit. I mean, were hit, they had a substantial pullback, and it's normal, after something doubles in a month and a half, it's completely normal to see a 30-50% pullback in a week or two. Um, Surf another robot stocks came back to where its move started. SYM, another one, uh, A AIO. Um, so you get the gist. A lot of the momentum stocks, even quantum stocks, were kind of in a pullback mode, or at least they shook out uh, late buyers last week. And to me, that's kind of a sign of what to expect in the near-term future, because typically when the indices pull back a little bit and leading momentum stocks don't budge, they just, go sideways or even continue higher. That's a sign that probably we'll see a bounce in the indices very soon. But when we see momentum stocks just starting to fall apart and getting hit hard, to me, that's a sign that we'll see more volatility ahead, at least in the very near term. Um, so last week, typically in a bull market, corrections take the form of sector rotations. And we saw that last week there was a rotation into the energy sector. Crude oil bounced, anything energy was on fire, oil, coal, even solar stocks, which are kind of lateral energy play, kind of held a lot better and are potentially setting up here. And they're also an interest rate play, all the solar stocks. They would benefit from lower interest rates. Speaking of interest rates, here's a chart of the 20-year plus Treasury. Um, they they rallied in expectations of rate cuts a few weeks ago, and then the second the Fed actually announced what everybody was expecting, the 25 basis points cut, they dropped. So the market can sometimes be quite counterintuitive in the short term and just go in the direction that will surprise most people. So essentially, half of that move that interest rates had, half of that drop has already been restored. And now they're back to potential resistance. So if you want to get involved with the interest rate trade, I think this might not be a bad point to, get involved. And, getting involved, means basically getting long TLT, the long-term treasury bonds, or the leverage version is TMF. Um, Obviously, quick disclosure, everything I say here is not a financial advice. It's just for informational and educational purposes. So you need to do your own due diligence, because all the risk is on you. So other interest rates plays, other than treasuries, are obviously small caps. They tend to perform better when the rates are expected to drop. Last week we saw a pullback to the rising 20-day, and then on Friday bounce. So it'll be interesting to see a follow through here. Um, I would, but the other scenario is also possible, pullback to the rising 50-day, where I think, buyers are probably going to step up um, more seriously. So yeah, everything is still in an uptrend. Everything is still in a bull market. Biotech, another interest rate play, also showed notable strength last week. As you can see, they even closed near their highs of the week. Um, Kind of been going sideways for many, many years. He hasn't really done anything since 2014. Um, as a sector, obviously, individual biotech stocks have had very different destinies. What's kind of working right now in the market are those special plays, and those companies, industries that the government gets involved. Like last week, we saw that with lithium, LAC. I think years ago, the government gave them loans or grants to save them. And now the US government wants a stake in those companies. And the market is really liking that. And every single company uh, that has been mentioned that, the US government is going to take a stake in them has really doubled or tripled in a very short period of time. Last week, we saw that with Lithium Americas, LAC, and that move actually fueled a rally in all other lithium stocks, LAR, SGML. This one is from, or SMGO, something like this, from the one from Brazil. ALB, I think that's the US one, setting up here for a potential breakout near 88. Um, so last week we also saw Chinese stocks starting to show some relative strength. I wouldn't chase them here. I think they can pull back more and offer better buying opportunities. But yeah, stocks like Baba have been one of the top performers. Alibaba year to date, very extended here. Well, it's always better to buy near a base, when we see that range contraction as we saw in August. These are the best spots really to enter, because we can enter with a tight stop under the base, or, under the breakout, under the low of the breakout day. And that's when we have a chance to capture, 5 times, 10 times our initial risk. While if we chase, somewhere here, there is a risk that we might get shaken out on a normal pullback to a rising 20-day. And that's not really, very smart to do. So for next week, a few other ideas that I wanted to touch upon. I think the DDOG is another one that is starting to set up again. He had a big move here one earlier in the summer when it broke out above its 200-day moving average. When I had some monthly options here that did really well. The company has since pulled back, digested its move, and now it's starting to set up again for a potential breakout above 140. So I would be interested in this one. Another one, Broadcom AVGO. It tested its earnings gap here, and it's starting to contract, to show some range contraction. So I would be very interested if this stock essentially kind of tests its previous high near 320, 318, and then especially near its 50-day moving average. I will be interested in entering around there on weakness. On strength, I will be interested, above, last week's highs. And last week it didn't really pay to chase strength in most momentum stocks as most were under pressure. Another one that is started potentially setting up is Snow. Here you have a earnings breakout, then sideways consolidation. So it might need more time here, but this one is holding well, potentially setting up for higher prices. And you can see it on a weekly, kind of bull flagging here, 4 weeks of range contraction. So once the indices digest their current move, which might take, a week or two, we might see another attempt for continuation higher. That's all from me this week. See you next week.